Hi, this is Professor Wheeler at the University of South Florida School of Accountancy. In this video, I'm going to talk to you about basic concepts in AIS, that is, Accounting Information Systems.
AIS Overview Part 2. In this part, we'll look at the types of business problems and the business information needed to solve them. Okay, let's start with the management pyramid. The management pyramid gives a traditional view of a company. At the bottom are day-to-day business operations and transactions. For example, inventory procurement with its distinct events such as purchase requisition, purchase order, goods receipt, invoice payment. Above that is operational or lower level management, which manages the daily operations. In our example, the operational manager would oversee the inventory procurement process to evaluate it and to intervene when something unusual occurs. Tactical or middle managers might deal with such issues as planning for next year's inventory needs or estimating when reorder points will occur. Finally, top managers would deal with strategic concerns, such as a plan to start production on a new item and what inventory will be needed for those new items. So as you can see, each of these four levels has its own unique problems to deal with. An important aspect of information and communication within a business is the direction of the flow of information, whether it is vertical or horizontal. When we speak of the horizontal flow of information, we mean information that is moving in the same level of the management pyramid. Usually the lowest operational level, although sometimes it can be at any of the levels. The defining characteristic of horizontal information is that the information maintains the same level of detail throughout the flow. For example, with purchase requisition to purchase order to goods receipt to invoice to payment, all these contain information at about the same level of detail. In the purchase requisition, we request 10 tires. In the purchase order, we order 10 tires. In the goods receipt, we receive 10 tires, then we are invoiced for 10 tires, and we pay for 10 tires. In the vertical flow of information, the level of details change. As we go up the management pyramid, information becomes more summarized or aggregated. For example, sales information at the lowest level is about individual sales events. As it flows up, it would become summarized, maybe into sales by departments, then by division, then by branches of the company, and by the company itself. Vertical information may also flow downward. Budgets are a good example of this. A general company budget is set at the top, then promulgated downward and broken into each of the divisional budgets and departmental budgets, etc. Business and accounting problems may be classified by their degree of structuredness. As you can see, structured problems are well defined. Use internally provided information, use detailed information to solve, have occurred in the past frequently, and result in solutions with high degrees of accuracy and certainty. On the other hand, unstructured problems are less defined, use external sources of information, often involve the future, occur infrequently, and have solutions that are less accurate and more uncertain. Of course, most problems in the business world fall somewhere between these two extremes. A good example of a highly structured problem is the generation of financial statements. GAAP gives us specific guidance for what are and are not accounting events that are to be recorded as journal entries. Then the process continues to the ledgers, to account balances, closing entries, worksheets, etc., till finally we have the financial statements, balance sheet, income statement, statement of cash flows. So we can see that the financial reporting cycle has problems and information that are well defined, internal, detailed, historical, frequent, high accuracy. An example of a highly unstructured problem might be a company merger. With this, there's a lot of uncertainty. There's no well-defined formula or process for arriving at the decision. Mergers occur infrequently. Designing a new car would be something that falls between the middle of these two problems, somewhere on the continuum of structured and unstructured. The process is pretty well defined, but there's still a lot of uncertainty involved. For example, what to change from other car designs. What will the market want? Finally, let's look at how accounting specifically thinks about information. In this case, financial accounting information. The figure you see is from FASB. It is from Statement of Financial Accounting Concepts Number 2, Qualitative Characteristics of Accounting Information. Starting at the top, we must first know who the information is for, what they will do with the information, and what they know about the underlying business process. Take, for example, professional and non-professional investors. They both want to use information to decide about investing in a company. However, they have different levels of understanding of the investment process. Next is the pervasive constraint of cost-benefit. If the information is so expensive to produce in acquiring and processing the data into information, then there's no reason to produce that information. Then come usefulness and understandability. These take us back to the decision maker. What do they plan to use the information for? What's their goal or objective? What do they understand about the underlying business process they want this information for? Information should be relevant and reliable. As you can see, relevant information is timely and predictive. Again, take our investment example. To decide whether or not to purchase stock, investors want information that tells them about the company right now and allows them to predict what will happen to that company in the near future. Reliable information, on the other hand, is defined by validity, accuracy, neutrality, completeness, verifiability. That is, reliable information is objectively true and can be tested by others. Unfortunately, there is often a trade-off between relevance and reliability. It takes time to carefully process, test, and verify reliable information. And as we noted, timeliness is an important characteristic of relevant information. We see this trade-off in financial statements, for example. Accounting regulators are willing to give up some relevance to have highly reliable financial statements. Financial statements used to take months to produce after year-end closing, and thus were not very relevant to, say, our investors, who would get their information from more current sources. Thanks to IT, financial statements can now be published in a matter of weeks, if not days, and therefore have reclaimed some of their lost relevance. Comparability is the ability to compare different reports. For example, comparing the different reports from various car manufacturers, their different financial statements. Materiality at the bottom is basically the importance of information. If the information produced changes a $10 million account by only $2, it is not material and therefore would not be used or recognized in a financial statement. Thank you.